Hey, what's up, guys? So I just wanted to share briefly some of the new stuff that I've been kind of experimenting with on Bookmap, which is my new trading platform you're looking at right now. And Bookmap comes with some APIs, which is basically just code or you know their algorithms that you can employ that give you a really really big advantage when you're placing your trades. So the first one is called Chase, and basically what it does is, as price is moving, um, Chase basically makes your order kind of hug the current price, and then as price snaps back a little bit, it will fill your order, and then of course you're off to the races, and yeah, so that the reason why it's advantageous is because you can enter with a market order and just take whatever the best price is at that moment. However, you're gonna sacrifice um, some precious ticks. Ticks are in futures, or if you're trading stocks or whatever, you're gonna sacrifice 4 or 5 cents, 8 cents or whatever, because you're just taking a market order rather than entering at an ideal situation. So yeah, again, all it does is it hugs the current price, and then as soon as price backs up, a couple ticks and snaps back, it'll fill. And I'm sure the institutions, like, you can see all the okay. So this is called the heat map. All these white bars basically, and the institutions will basically do this as price is going up. They're just spamming these orders, right? And they can just fire off as many as they want. And anytime price tries to back up, it's going to start filling their orders. And they'll just keep adding and adding and adding as price keeps going up. And these trades that they got in at this level, they just keep getting, better. And they're in at better and better positions as price continues. The second one is called Escape, and basically what it does is, if price, say you put in an order, if price starts to retrace, or go against the direction you want to be in, if there isn't high liquidity, like right here, this is really high liquidity. These are just standing orders, standing limit orders in the order book. If there isn't high liquidity behind you, the escape algo will move your order away. So what I've been doing is I've been combining these two, so I can put it in an order, and it will hug their current price, so it'll get me in at 4 or 5 ticks better or whatever than I would have been if I just placed a market order. But not only that, if I put in my order and there isn't high liquidity or really strong support behind me, the escape algo is going to move my order away. So I'm going to show you here kind of what it looks like in action.
Task imbalance 71%. Iceberg
So you
47.
can see high liquidity up here. The longs are going to try and get through that. And yeah, they're sweeping the book right now. You can see right here on the DOM. Still a lot of resistance at this level. And all these green bubbles, these are market orders, or
Iceberg
the aggressive
22.
orders, and they're just taking the best price they can get. But that's a decent amount of size. So we got quite a bit of support here, and these little white tick marks, that means that it's another algo. It will kind of assess where there's one really big buyer seller. So these white tick marks, like this area right here, this is just one guy. All right, so I'm gonna go ahead and place an order. You can see how it's hugging price, and then because there's high liquidity behind me, it went ahead and it filled my order. Now we're gonna see I'm gonna move my stop right below this high liquidity, and hopefully we get the buyers coming back in here. Not a lot of market orders coming in. And you see they're starting to add. Yeah, okay, they're adding. Nice. And I'm going to throw in another one. So that liquidity is getting busted through. We'll see. Nice. Okay, now we're getting some good market orders. There we go. Okay. I'm gonna try and get out right up here if I can. That's close enough. Cool. All right. So, yeah, you can see how it was advantageous because it essentially knew that there was really high liquidity behind me, so it allowed those orders to get filled. So let's see. You can actually see my P&L from last night. This is all just on simulated trading, but okay. So yeah, I can see high liquidity coming in on the short side. I put my order in. You can see how it's hugging it, but it doesn't let it get filled because there isn't high liquidity behind me. And all this
bid imbalance 74%.
How far the chase remains away from this. That's programmable. And same with the escape. Like you can program in
bid imbalance 70%. Iceberg
you can program
20.
in how far you want it to remain away from price if there isn't high liquidity behind you. So. And then there's another algo. This one is called execute. And basically what it does is it will enter if there's a really big imbalance on your side. And then I'm pretty sure it will close it out too if there's a really big imbalance on the other side too. So I'm going to turn off chase and escape. And this is a really good algo if you're trying to get in at like a high liquidity area, and if you're a market maker or something, maybe you'd want to support the market a whole lot, so you could, anytime there's a really big imbalance, you can just jump right in there with all your orders. So let's see kind of a trend line right here. I'll try to get in on that retrace maybe.
Ask imbalance 73%.
So you can see the bids, they're getting smaller and smaller here. The green dots. So that's exhaustion. Sellers are starting to come in now. There's definitely some support in this area, as you can see. Alright, here's my resistance. I'm going to put in my execute order. And as soon as there's a big imbalance on my side, it'll fill me. Alright, there we go. I'm going to put in another one. Yep, so there's a big imbalance to my side in the order book. That's why it filled me.
Ask imbalance 79%.
Right.
Iceberg 39.
I mean, you get the idea. The execute one, it can get you in a little bit too early sometimes, from what I understand. And because basically, when it's going to engage is when the market is pushing really strongly against your side, but you have a whole lot of volume behind it, basically. Alright, so that almost filled me. It moves it like one tick behind.
Bid imbalance 73%.
I mean, if it doesn't move a lot, you're not going to get filled. So yeah, you can see it jump my order. So I'm not in yet. It's just a resting order. There we go. There's the imbalance. Okay. Oh.
Ask imbalance 74%.
Yeah. On the wrong side.
Ask imbalance 71%.
Alright, I'm just gonna close that.
Ask imbalance
Alright,
76%.
so now that we know we've got some
Ask
direction,
imbalance
you can see the really big market
73%.
orders up here. I'm gonna try it one more time on the long side. Okay, so it moved my order up here. Actually, it filled me right at that level. There's my stop. A lot of resistance here. I might have to back my stop up a little bit. And that's another great thing about Bookmap. You can have it automatically put your stops in.
Bid imbalance 70%.
Or you can actually have it put in bracket orders where it'll put your stop in.
Bid imbalance 74%.
Your target up there at a set number of ticks. And this area's got a hold right here.
Bid imbalance 72%.
I mean, there's some right here, but it's weak. Heavy selling coming in.
Bid imbalance 77%.
Yeah, this is gonna get sold right through. Oh, maybe not. There's a lot of volume right there.
Bid imbalance 75%.
Yeah, you can see all these orders. This is just one guy. Alright, now we got, if we move up, these guys are all going to get trapped in here. Yep, they're getting trapped.
Ask imbalance 70%. Bid imbalance 73%.
Looks like we're getting some exhaustion here on the long side.
Bid imbalance 70%. Bid imbalance 75%. Bid imbalance 76%. Bid imbalance 70%.
That's saying bid imbalance. That basically
bid
means
imbalance
that
72%.
you're getting heavy selling pushing into all of those bids, and the bids are they've got a lot of support, a whole lot of limit orders in the order book. Limit orders, basically, those are your absorption.
Bid imbalance 71%.
These are just standing orders that are absorbing anything the market tries to sell through it.
Ask imbalance
Same thing
74%.
on the bear side, these are all standing orders. So anytime the market comes up to this area, it's going to absorb
bid imbalance
all of these market
70%.
orders, the red and
bid
green
imbalance
dots. It's gonna absorb
73%.
all of those, So unless in this instance, the bulls, if they have unless they have enough market orders to literally buy up all of these limit orders and to completely overwhelm them, this resistance will hold. So right now you're seeing all the absorption happening right here, and the bulls are adding. That's a good indication. Got some volume, not a lot, but and you can see they're pulling some of their liquidity. That gray bar you can see relative to this area, you get this darker level right in here. That means they pulled some of those orders.
Bid imbalance 71%.
Some weakness now. And the bears are trying really hard to push through it, but you're seeing these red dots are getting smaller. That's exhaustion.
Ask imbalance
You see really
74%.
big volume right here, but then you get exhaustion in this area. They're not selling it hard enough. They added a lot right here of resistance. Now we're moving into kind of a micro trading range. These numbers, these are iceberg orders. So basically, the really big players, they have the ability to
Ask imbalance
only show a
73%.
portion of their orders in the order book. I don't know. I'll get back to that. But you can see all the market orders. They just swept the book.
Iceberg
right
20.
They bought up all of these orders. and it was enough to completely overwhelm all of these standing limit orders right here.
Ask imbalance 70%.
So basically what an iceberg is,
Ask imbalance 70%. Iceberg 27. Iceberg 21. Ask imbalance 71%.
In the order book, basically. And you can see them executed, in this area. God, I wish I would have hung into that pullback. Yeah, so our orders, like I said, they stay in the order book, but the really big players, they don't always have to show their orders in the order book. They only have to show a portion of them, hence the term iceberg. So although you might see a big mound or whatever right here, there could be orders stacked all the way up to this level because of the icebergs. You start seeing some pretty big numbers in here, 45, 74, 24, 21, 27. That means that there's a discrepancy of the number of orders that were executed at this level and the number of orders that were actually showing in the book. So right here, there were 74 more orders executed at this level than there were orders in the order book. Hence the term iceberg. You can only see a portion of what's actually being traded, but the really big players, they have the ability to hide a significant portion of their orders. So when that happens, basically, like, you see some a white band right here that's pretty strong. Well, in reality, this white band was a lot bigger because of the icebergs. And that can be helpful because if you start seeing big numbers like this, you know that it's big players. It's the institutions that are trading at these levels. And like right up here, 138, that's a sizable order, So obviously there's a institutional trader up in this area that really doesn't want price to move beyond here. And if you can start paying attention to this stuff, it helps you see like who's in the market. It's just like a poker game. You can kind of it tips their hand a little bit, and this area is going to become important because he's going to try and defend it. If price say comes down after this and retraces and then goes back up again, he's going to want to defend this level. So that can be helpful information. Anyways, so I mean that's the main stuff I just wanted to share because I thought the algorithms were really cool. I literally just kind of discovered them last night, and they do come with Bookmap, and I'm really just trying to kind of experiment and figure out how I can employ these things to an effective trading strategy. Yeah, super interesting stuff, and it definitely gives you an idea of how the the big money is trading, and when you start seeing activity like this, like the execute order that I was putting in, where there's a big imbalance, it'll bring your order one tick behind the best price. I wouldn't surprise me as this stuff is backing up, you're getting people that are putting out these algos, to kind of push the market or provide some resistance. And then of course when it dumps, they're going to come in with their big market orders. And just like the chase algo, they're just going to keep throwing more orders out. And if price tries to snap back a little bit, it's just going to fill those new orders and push it right back down again. So you start to get an idea of how the computers behave in the trading environment, and what kind of moves they have, so to speak, and how we can identify where the big money is at and use that to our advantage. So anyways, that's all I got for you guys. Just wanted to keep it short and sweet. But good luck with your trading, and I'll see you next time.